Medical Properties Trust stock, ticker symbol MPW. This stock is down 57% year to date, which is an insane drop of course. On the 26th of October, MPW presented quarterly reports where they beat on FFO but missed on revenue. Most people love MPW stock because of the dividends, but they just announced a $0.15 dividend, down from $0.29, so almost cut in half. But still, dividend yield is sitting at 12.6%. And with the stock coming down big time and being a very popular dividend stock, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does MPW do? Medical Properties Trust is a healthcare facility REIT. The company owns and leases healthcare facilities. The vast majority of medical's revenue is generated in the United States. And when we check the recent earnings report, we see that MPW reported a net income per share of $0.19, down from $0.37 last year. A major drop in net income per share. FFO was reported at 0.36 versus 0.42 in 2022. So this is one of the most important numbers with REITs, and it is dropping, which is something that I don't like. But it is looking better than the net income. Another important number to me is the net debt to EBITDA. I prefer a range of 5.5 to 6.5. MPW is sitting at 6.7, so this number doesn't look any good either. It has to be said that it's pretty close to the range. General acute care hospital is by far the biggest segment, representing 72% of the total revenue. Behavioral health facilities is representing 15.7%. So in terms of diversification, it doesn't look that great. But to be honest, I do like the niche focus they have, so I'm not worried at all about this diversification. And if we check the operator breakdown, we see the Steward Healthcare is the biggest operator. I would prefer a bit more diversification here. Roughly 67% of the revenue is coming from the United States, and UK is second with 26%. To me, this looks really good. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. MPW is a 2.93 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 3, indicating they might be undervalued. Later in this video I will show you my 3 price targets for MPW stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 1.37 billion, and in this graph we see that revenue went up in the long run. However, most recently it is coming down quite a lot. We see that margins are going up and down quite a lot in the long run. But the thing most people are worried about is the most recent decrease in margin. And to me, this doesn't look any good. EPS is going up in the long run. It is not really steady and consistent, but that is very common for a REIT. However, the most recent decreases is something that of course worries me a lot. Analysts expect 2023 to be a tough year in terms of EPS. After that, they expect EPS to return to normal historical levels again, with a big increase in 2024. For the revenue, it is not looking any good, with analysts expect a decrease over the coming years. Return on assets is sitting at 3.3%, which is a low number, even for a REIT. Return on equity is also really bad, And the most important number, return on invested capital, is sitting at 2.4%, which is again a low number. And it is slightly lower than the 5-year average, so that is also something that I don't like. Current ratio is at 3.52, which is a decent number for a REIT, nothing special to mention here. Right now MPW has 10 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. MPW has 340 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is still sitting at 12.6%, which is an insane number. But keep in mind MPW did cut the dividend. Annual payout is at $0.6 and payout ratio is at 58%, which is below the average for REITs. The growth numbers aren't updated yet after the dividend cut. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to go down from here. Overall, these dividends don't look that good to me, in terms of growth and safety, but how about the historical returns? I decided to compare MPW stock with the overall market, in this case the S&P 500. Next to that I added CTRE and LTC. On the 5-year chart we see that MPW underperformed the S&P 500 big time, with a minus 60% return including dividends. The S&P 500 did beat all stocks in this list by a significant amount. On the 1-year chart it looks pretty similar, with MPW sitting at a minus 57% return. The S&P 500 and CTRE are having a significantly higher return. And keep in mind this is including dividends. On the 6-month chart it is again MPW sitting at a negative return. CTRE had the highest return, beating the S&P 500 and others in this list. On the 1-month chart it is the S&P 500 again with the highest return. MPW is sitting at a minus 1% return. So bottom line, MPW underperformed the S&P 500 short term and long term. But with the stock hammered down quite a lot, it could be an interesting buying opportunity. So is this the perfect time to buy MPW stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 5, 7 and 9%. And for the free cash flow margin I'm putting in 38, 40 and 42%. For the PE ratio I'm putting in 20 and for the price to free cash flow I'm putting in 10. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5, but I want to build in a higher margin of safety here. Right now MPW stock is at $4.92. I hit analyze and we see a lot of green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $6.3, which is right above the current stock price. We have a mid price target of $7.5 and we have a high price target of roughly $9. To me the low price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion is that even with the numbers showing that MPW stock is undervalued, I'm not buying. The dividend cut was a well-made decision, but I think in the coming years it won't recover that easily. Revenue is coming down big time, a lot of problems with other fundamentals as well, and debt is sky high. For now I'm skipping this stock, but I will keep analyzing them every now and then to see if things are changing. If you decide to buy this stock or expand your current position, please be very careful. And remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.